A massive weekend for the housing market with the highest number of auctions in 2 years. Wealthy Aussies living in the UK are getting a tax shock. And Star Entertainment's CEO resigns. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 25th of March, 2024. I'm Michael Thompson, and good morning, Adam Lang.
Good morning, Michael.
Now, if you are missing Sean Aylmer, he's only been gone for half a day.
And we both are.
Oh, yeah, of course we are. But you don't need to miss him too much, because you can hear him today having a chat with Centennial Asset Management's Matthew Kidman. It is our daily interview. It is a great look at local markets, the outlook for the ASX 200, and as always, whenever Sean talks with Matthew Kidman, one of the things that I like most about those interviews is that Matthew's great at kind of picking out a few stocks that you might not have even heard of before, but that he is keeping an eye on for one reason or another, and he talks you through his reasons. And we're not an investing podcast. You should seek professional advice before making investment decisions, but it is always fascinating hearing what someone like Matthew Kidman has to say.
And he always has great banter with Sean.
Oh, yeah. Yeah, they obviously get along very, very well. So if you're missing Sean already, have a listen to today's interview, and Matthew Kidman has some great words of wisdom today. That's coming up after the show. But the main story this morning, Adam, it was a bumper weekend of auctions. There were 3,470 scheduled across the country and 3,357 that actually ended up being recorded by CoreLogic. This makes it pretty much the biggest weekend since the same pre-Easter weekend in 2022. So that's in 2 years.
Yeah, Michael, the spectator sport of real estate was massive this weekend and well up from the 2,834 last weekend and 2,303 at the same time last year, though not quite as strong as the more than 4,000 that went under the hammer in 2022. So Sydney had 1,177 auctions and a clearance rate of 75.9%. Melbourne had 1,636 and 69.9% of them sold under the hammer. Brisbane had 242 with a 69.8% clearance rate. And in Canberra, 102 homes were up for auction, 71.4% sold. Adelaide, 185 with an 80.7% clearance rate, while in Perth only 14 were being auctioned and 71.4% of those sold. In Tasmania, which had a state election over the weekend, just one home went up for auction and that did not sell. The activity in the housing market has been heating up in this interest rates on hold period from the Reserve Bank of Australia, and the housing affordability debate has taken off too.
I'll get to that debate in a moment, but Adam, you're a statistics fan. I would say a statistics nut, and you can actually hear the glee in your voice as you were going through those numbers. I was like, you are really enjoying this, aren't you?
Very high benchmarks, quite exciting.
Oh yeah, it certainly is. But in terms of that, the housing affordability debate, it got really political over the weekend, didn't it? Because you had opposition housing spokesman Michael Sukkar coming out absolutely swinging against the government for opening, quote, the floodgates to migration without any idea where they'd live.
Yeah, Michael, Sukkar was asked on Sky News about a news report from Build Skills Australia. It has found we're tens of thousands of tradies short of what's needed to reach the Albanese government's target of 1.2 million pledged houses. He said migration is surging, but these construction workers had not been dialed up on the skills list for incoming migrants. Instead, he said, it was largely students coming in.
Yeah, it really is. It's a very political topic, isn't it? We posted a video about this on our social media, on TikTok and Instagram, and the comments on TikTok in particular, it is something that a lot of people have a lot to say about.
I think it's multi-generational concerns now, isn't it, Michael? You see whether it's apartments or houses, no matter where you are in Australia, the pressure on pricing is really significant.
Yeah, it certainly is. Now, turning to local markets, Adam, last week, I suppose you'd say it was a solid week for the markets. The S&P ASX 200 closed 0.2% down on Friday to 7,771%, but it actually finished up 1.3% higher across the week. The resources sector slipped a bit at the end of the week, with mining and energy stocks wobbling I think would probably be the best way to describe. You always get the impression that Sean has fun kind of coming up with ways to describe markets. So now it's our turn,
Ooh.
Adam. In Sean's absence, we can have the fun describing how markets have moved. The worst one is when Sean refers to markets gyrating. And
It's not an adjective we'll use, perhaps.
yeah, whenever he does it, I'm like, and he gets this little wiggle as he does it. Anyway, mining and energy stocks are a bit wobbly, but that was off the back of strong gains throughout the rest of the week.
Yeah, a lower oil price pushed down the value of Woodside and gold prices slipped, which pushed the gold stocks down. Among the large caps, the banks were lower, led by Westpac, which fell 1%. Fortescue Metals Group was down 2% and Aristocrat Leisure was off 2.5%. Goodman Group was one of the better performers of the top 200, and that was up 3%, while CSL finished 1.3% higher.
Okay, now to international markets, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au for more. And what a massive week we had last week for international markets and for central banks as well. And it's worth listening to Fear and Greed the week ahead this morning, because our resident economist, Stephen Koukoulas, gives his take on everything that happened in terms of in central bank land, I suppose we'll say. And he always has some really interesting perspectives on that. But on markets in particular, Wall Street, the S&P 500 hit a fresh high during the week, had a slightly weaker end to the week at 5,234 points. That was only 30 points below the new record, though, and the Dow Jones fell 0.8%, ended the week up 1.7%, while the Nasdaq was up 0.2% on the final trading day, ending the week up 1.7% as well.
Yeah, Michael, amongst that Reserve Bank bonanza around the world, there are signals that investors are shifting money out of the US, with a financial review citing TD Securities, which found record-breaking inflows of funds the week before last were reversed in the last 7 days, with about US $21 billion of outflows. Now, that's one of the biggest weekly outflows since December 2022, suggesting that some investors are cashing out, and perhaps they're thinking this bull market doesn't have much further to run. Picking the top is really difficult. Goldman Sachs strategists think the year will end with the S&P 500 at 5,200 points, but they do have an alternative forecast where big tech giants do well and the index rises another 15%. Only time will tell on this one. The Nikkei 225 ended Friday up 0.2%, the Hang Seng down 2.2%, and the FTSE 100 was up 0.6%. Iron ore had a bit more of a positive week, up just under 1%, but it's still in a weak spot, down more than 13% over the month.
All right. There is a bit going on. We've got a bit to get through. We'll be back in a moment with the rest of the day's business news. Adam, the government is making a submission to the Fair Work Commission's annual wage review, recommending it ensures real wages do not go backwards. It wants a pay bump for Australia's lowest income earners in line with rising prices.
Yeah, Michael, and one of the complexities this year is that the amended Stage 3 tax cuts are kicking in from July. The federal government wants the Commission to see these cuts as in addition to any increase in award and minimum wages, not instead of or as a substitute. It wants wages to be increased in line with inflation across the board this time around, but it also acknowledges that in the long term, productivity growth is what should drive real wage growth. Inflation on the monthly read is currently running at about 3.4% over the year to January, and Treasury expects it to reach the RBA's target band of 2 to 3% in the next financial year. That's the financial year ending 30 June 2025, so not for some time yet. Treasurer Jim Chalmers said in a statement that many Australians are still under pressure, in particular low-paid workers.
And businesses, Adam, are finding their profit margins increasingly challenged, particularly in the discretionary sectors where households are cutting consumption, but it's not all bad news.
Yeah, Michael, and I think this is really interesting, and that's according to the business chapter of the Reserve Bank's Financial Stability Review. It tells us that most businesses are weathering okay right now, with their operating profit margins remaining around pre-pandemic levels. But there's a growing group starting to find it tough. Another challenge for some firms is that it's getting tougher to pass through their higher costs from labour and other rising prices onto customers because overall demand is lower. It's worth pointing out here that higher interest rates are more likely to affect smaller businesses because big businesses tend to use interest rate hedges and longer-term fixed-rate debt.
It's still pretty solid news, though. Company insolvencies are up, but really, according to the RBA, they're just getting back to more normal levels, what you might expect. Business related personal insolvencies are still very low, and big companies are able to service their debts. According to the central bank, their scenario analysis suggests that most listed companies can manage a period of higher inflation and interest rates well. So, really, kind of mixed news, but kind of edging towards good, I suppose.
Yeah, Michael, I think if you look back at the last 4 years, including COVID and now what we hope is post-COVID, it's actually pretty remarkable how resilient most businesses have been.
Now, speaking of one business that we've talked a lot about over the last couple of years, Adam, Star Entertainment is having a mass clear out of executives, including the chief executive, as it enters a critical final test over its casino license.
Star posted a late Friday ASX notice about a major shake-up of its executive suite, and this includes CEO Robbie Cook, the CFO, and the Chief Customer Officer. Star Chair David Foster will become Executive Chairman. The gaming, entertainment and hospitality business said the change was in the best interest of the company, which is currently waiting for the finalisation of an inquiry over its suitability to hold a Sydney casino licence. This is the second independent inquiry from the New South Wales Independent Casino Commission into Star. It's led by Adam Bell, SC, and is investigating whether Star has fixed problems, including cultural issues, to get back its licence. If this is unsuccessful, then it may lose its licence permanently. The review is looking closely at the leadership team's ability and suitability to fix the problems that have been plaguing the business.
This next one's an interesting one as well, Adam. Australian fast charger company Tritium, and we hear from them often when we are talking about particularly the kind of infrastructure needed for the growth in demand for electric vehicles. Tritium is appealing a fresh delisting notice from the NASDAQ. The NASDAQ wants the business delisted after persistently underperforming, with shares falling below 10 US cents for 10 days.
Yeah, Michael, and this is the second delisting notice for Tritium after one in August 2023 when its shares fell below US $1. Tritium has closed its Brisbane factory and shifted to the US to cut costs. On Friday, it also launched a plan for share consolidation to improve its performance, but it's unlikely that this will sway the NASDAQ.
Now, the Business Council of Australia has come out swinging against the Greens' proposed divestiture legislation, warning it will worsen the cost of living crisis. The Senate is expected to consider the Greens bill this week, which would potentially give the court powers to break up big businesses if there's a competition issue.
This one is testy. So this proposed law from the Greens is all about concerns that supermarkets are price gouging and have too much control. But Business Council of Australia's CEO, Brand Black, has hit out at the proposal, saying experts have looked at these powers in numerous reviews and ruled it out, finding it could negatively impact consumers, put jobs at risk, and upend the stability of critical sectors, especially in regional areas. Brand Black said the proposed law doesn't solve the issues of price transparency from farm gate to shop shelf and won't help with inflation. He criticised the laws as extreme powers for the courts and the ACCC and says they shouldn't be rushed through due to the risks of unintended consequences. He's bothered because the laws could capture all sorts of businesses, not just Coles and Woolies.
And while we're talking about supermarkets, Adam, Australian supermarkets aren't the only ones at the moment that are under regulator scrutiny, are they?
No. In the last few days, the US Federal Trade Commission has recommended that policymakers examine grocery store operators' profits and promotions closely, as prices have remained high since the pandemic there. The Federal Trade Commission is currently looking to block Kroger from buying a smaller grocery store chain, and that's called Albertsons, due to competition concerns and the risk of higher prices as a result.
Yeah, and we know that US President Joe Biden is certainly very alive to these sorts of issues, having taken aim at shrinkflation practices recently, which always kind of, I don't know how I feel about that term, shrinkflation. The White House told Reuters that the FTC's report shows the retailers increased their profits during COVID and have maintained those margins, and indicated that the government has concerns about higher costs. So it's certainly one to watch. And I suspect what I've actually done there, Adam, is almost kind of preempted our shift into international news.
Well done.
We will seamlessly kind of move. It's a glorious segue, this one. We'll turn now to the UK, where wealthy Aussie expats who are living there might be up for a slightly rude shock if they've got investments back in Australia.
Yeah, Michael, there's quite a few of them too. So new tax changes in Britain could really bite them. They could lose the benefits of negative gearing on their Australian-based investment properties, be followed by the UK's inheritance tax for a decade, even if they return to Australia, and lose the benefit of franking credits on Australian shares. Aussies retiring in Britain will also need to pay tax in the UK on any superannuation income streams, and that's according to the Financial Review. This is quite a big change.
Yeah, it certainly is. I know I'm a glutton for punishment here, Adam. Can you explain to me in a reasonable amount of detail how these changes work?
I'm so glad you asked, Michael.
I'm sure you are.
It's all about the non-dom rule. Have you heard of that?
No, actually, I'm going to be honest. Normally here I would go, yes. If Sean asked me, I'm like, yes, Sean, I have heard of that. And then just hope that he gives me enough information that I can bluff my way through it. I'm just going to be honest with you here. No, I'm not familiar with this.
Okay, it's only something I've recently come across too, Michael. So the non-dom rule, or those living in Britain saying they are non-domiciled in the UK for tax purposes, about 70,000 people are in this category, and this stops expats from paying tax on income or gains made elsewhere, just their UK income and capital gains. Now, after 7 years, they then get a flat charge of around 58,000 Australian dollars a year, and that doubles at around 12 years of being non-domiciled. The new plan exempts all foreign income and gains from any sort of tax in the first 4 years, but after that, they're going to find all their income from any country subject to UK taxes. And so that then includes rental properties and shares held in Australia, and negative gearing and dividend imputation are not recognised in the UK. So it's quite a significant change.
Yeah, it certainly is. Now, it wouldn't be an episode of Fear and Greed at the moment without a Donald Trump story, considering he's in the headlines most days, and his media company appears to finally be getting its merger sorted, with shareholders approving the much-awaited deal. Digital World Acquisition shareholders voted on Saturday local time to authorise a merger with Trump Media and Technology Group. The company post-merger will be named, you guessed it, Trump Media, and may be trading on the NASDAQ as soon as Monday US time.
So this deal will give Trump a 60% stake in the company worth around US $3.3 billion. There's also the possibility of more shares worth tens of millions of dollars via earnout provisions related to the stock's performance, though major investors will be stopped from selling for 6 months without board approval.
That timing could be quite interesting, isn't it? Because it could stop Trump from selling off shares to pay what are some kind of mounting legal bills.
Yes, Michael, that's potentially right. And he's due to post bond by Monday on his New York fraud case following a US $464 million judgment. And if he doesn't make that bond, the Attorney General may seize some of his assets.
We shall see what happens there. And look, we need to finish on something positive. A nice bit of good news to finish up with. We had quadriplegic Nolan Arbor, who is the world's first recipient of Elon Musk's Neuralink implant. We've talked about this before. He's given an hour-long review of the impact of the new technology on his life. The brain chip really does represent a massive step forward in medical technology. So the video posted, no surprise here, on X, obviously, has attracted plenty of attention.
Michael, this isn't the first time someone who is paralysed has been able to use tech to move cursors with their thoughts, but this chip transmits data wirelessly, whereas older models have needed wires through the skin. It took 5 months from when Arbor applied until the surgery was undertaken, and he's now been playing video games. The video shows him playing Mario Kart with his dad. Can you imagine that, the connection between father and son? He says it's helped him more than other assistive technology, but it's clearly a sign of what's to come in the future.
Yeah, it's all pretty exciting. I mean, that kind of thing, it seems so futuristic, but it is just so remarkable, the difference that it would make to people who need that technology. I find that just remarkable.
Yeah, genuinely life-changing for the individual, their families, for the people that live and work with them to support them. It's a profound change.
Yeah, certainly is. All right, up next is the Fear and Greed Daily Interview. Sean Aylmer is speaking to Centennial Asset Management's Matthew Kidman. Always a great chat whenever Matthew's on the show, and he's talking about the outlook for the ASX 200. It's quite a broad look, really, at markets and what this kind of period of interest rate limbo means for markets and what an eventual rate cut would mean as well, and kind of some stocks as well that he is watching. It is worth a listen. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And after that is Fear and Greed the Week Ahead, featuring Stephen Koukoulas, everything you need to know about the economy this week, and also his take on everything that happened last week as well. Both worth a listen. Thank you, Adam.
Oh, thank you, Michael. And we were pleased to get those both in the can just before Sean got on the plane.
We certainly did, didn't we? We made him work right up to the last moment. You might actually hear him a couple more times throughout the week as well, because there were some fantastic interviews that we just thought, you know what, we want to record these before he goes.
Yes.
And he was glad to do it.
Our international journalist, Sean Aylmer, reporting from location.
Reporting live from Bali. All right, it's Monday, the 25th of March, 2024. Make sure you're following the podcast, and please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.